Now, in today's episode, we're going to be talking about what might end up being one of the most compelling investment opportunities that's out there. And that's this commodities bull market that's just getting started. Whether you're talking about gold, whether you're talking about silver, whether you're talking about copper, whether you're talking about uranium, these things have the opportunity to move so tremendously. And today we're going to be breaking down this entire macro landscape for you so you can make the best decisions about this incredible financial opportunity in the commodities markets, in the gold, silver markets. So today we have Steve Penny, one of my very good friends. Now, Steve is a creator of Silver Chartist, which is, in my opinion, the absolute best bang for your buck newsletter for commodities, investing in mining stocks. And it's $9. It's like the cheapest thing ever for his paid program, but you're learning the ins and outs of all of these mining aspects. It's incredible. He also has an amazing free newsletter. His free newsletter is better than most people's paid newsletters. And so if you want to learn what's happening on the ins and outs of the commodities markets, gold, silver, uranium, copper, what mining stocks you should be buying, which ones you shouldn't be buying, some incredible opportunity there. And so the link to it is right there down below to his free newsletter. It's right there down below in the description and pinned to the comments. Right there down below, you will see it. And make sure you hit the like button on this side right over there or this side right over there to send this video out to more people. Comment down below, go silver, go. Comment down below, go silver, go. And last but not least, just a shout out to our channel sponsor, which is Vizsla Silver. They've had some tremendous new discoveries and new mining results recently that have looked fantastic. So that's Vizsla Silver. So thank you for being our mining stock sponsor today. And Steve, it's good to see you.
Yeah, good to be back, Jake. Thanks for that kind of introduction.
All right. So first of all, is it true, before we get into this first really amazing chart here, is it true that you had someone sign up for your $9 newsletter that made so much money that they actually bought themselves a new car shortly there?
Yes, that happened. And when I heard that, it made my day.
So that's a real story. So I want to encourage everyone to just check it out. His free newsletter is epic. And the reason is just this is an amazing opportunity for all of us retail investors. So check that out in the description and pin to the comments for his free newsletter. But this first chart we're looking at here is commodities versus the S&P 500. And a lot of times when people watch the channel, there'll be people that'll say, Jake, you're talking about, negative things. Why don't you talk about more positive things? And because once you understand the currency devaluation is at play, there actually is probably some of the best investment opportunities we've seen in decades. And one of those are commodities, because as you have currency devaluation, you have an incredible move in commodities. Not to mention when you shut down the global economy, lock people in their houses for a year and a half, take away their jobs, what are you going to do? You have to do infrastructure bills, which means commodities are going to have to go up tremendously. And so, Steve, tell us about what we have here. And do you agree that this isn't just like about doom and gloom? There is incredible financial opportunities in these small commodity and mining stocks, is there not?
Yeah, you put that so well. We are certainly headed into, or we're in the midst of a crisis, and there's a lot of certainly things to be negative about. There's no denying that. But one thing we can do is position ourselves to be at the receiving end. And, it's important to realize that wealth is never really destroyed, it's transferred. And in an inflationary environment, wealth is transferred from people who hold paper assets to people who own tangible assets. And what this chart right here shows us is that commodities have never been so undervalued relative to paper assets, namely the S&P 500 here. And this chart goes back 40 years. And you can just look at this chart and it should be obvious. Look how cheap commodities are. This is a historic opportunity here, right now. And what I like to do is not just look at commodities in general, but looking at this chart, let's drill down further and see which of these commodities are the most undervalued right now. And from my perspective, those are silver, uranium, and gold. And you could also make a case for platinum, copper, and nickel, which are my two favorite battery metals.
Yeah, so the thing about this, like to really grasp this, is really amazing because people will say, look, you're messing around with gold or silver and the price doesn't go up very much. You should be in crypto. And I own a good amount of crypto. I like crypto, but I think what people miss is if you own small cap mining stocks, whether it's a copper stock or whether it's a uranium stock, these are the things that compare in the gains to that. And as you can see here, I mean, that is an incredible looking chart there. So do you agree with that premise there, Steve?
Yeah, you just articulated my exact thoughts, and it's such a. I love hearing you say that, because people compare crypto to gold, and I don't think that's a fair comparison. And again, I'm not anti-crypto. I love seeing my crypto friends making a killing in these recent months. But I think a fair comparison would be compare some of these cryptocurrencies to the junior silver mining stocks or junior uranium miners, and now you've got a more comparable risk reward.
Or junior copper, which have been nuts. These small copper stocks. So show me what else you got here. I mean, obviously this is compelling, but show me what else you got here.
Yeah. So here, this is another. So today we're just going to look at some big picture charts here, some longer dated charts. So this is a chart of the Dow versus gold going back to 1980. And what's really jumps out here on this chart is that back in 1980, the Dow bottomed at 850 points, and where did gold peak? 850. So that's a 1-to-1 ratio. And that's happened several times over the past couple hundred years. And where we are now is up around 20-to-1. So gold would have to outperform the Dow by a factor of 20 just to get back to where we were in 1980. And if you look right here in 2012, that ratio got to 6-to-1. So even if we just go back to 6-to-1, which I think we're going to go a lot lower, gold would outperform the Dow by a factor of over 3.
So is that 1980 mark? Was that the end of the commodities market?
It was.
Big. Okay.
It was, yeah. And these are ratios that I use. These are things you can use as part of your longer term exit strategy. You don't really want to use dollar targets because the dollar is going to become an increasingly less reliable unit of account. You want to use ratios for your exit strategy. So I'm not necessarily going to wait for a Dow gold ratio of 1-to-1, but as we start getting close to that, that may be a time to start scaling out of some of your gold or precious metals positions. But we're a long way from that.
Show me what else is here.
And so if you thought that chart was compelling, comparing Dow versus the gold, wait till we look at the Dow versus silver. So we've got this. I hadn't looked at this chart in probably a year or two, and I was just blown away when I put this chart together last night, and I tweeted it out. And so this goes back to 1979, and you can see when the metals peaked, when silver peaked in 1980 at $50, that ratio was 20-to-1. Well, where are we now? We're over 1,000-to-1 silver Dow ratio. So what that tells us is if that ratio goes back to where it was in 1980, which I am convinced it's going to in the fullness of time, it might take some time, silver will outperform stocks by a factor of 50. And that's the physical metal. That's not thinking about the mining stocks. I mean, if silver outperforms the Dow by a factor of 50, what are the mining stocks going to do? And even if we just went back to where we were in 2011, that's a factor of 4. Silver would outperform stocks by a factor of 4. So really powerful chart here.
1,000-to-1 right now versus 20-to-1 in the 80s. That's amazing.
It's one of those things that's almost like if I just said this and we didn't have a chart, it would sound like you're being sensational or something's not right there. But I mean, the chart is right here. This is data. This is history. This is historical precedent. And there's no arguing with this. It's just data. And this tells us that silver is ridiculously undervalued, especially relative to general equities.
It's interesting because
absolutely. Yep. 100%. And big picture charts like this too kind of give you the right perspective, because we get caught up in the day-to-day or even month-to-month where, we've been down for a few months now. Well, look at a 40-year chart like this and ask yourself, do I want to be in tangible assets like silver, or do I want to be in stocks?
Powerful. So what else you got?
So I thought we'd just take a big picture look here at a 10-year chart for gold. And despite this big pullback we've had from the $2,089 high, this chart is undeniably bullish. Anyone who looks at charts and technical analysis and looked at this chart is going to say, yeah, that's a bullish looking chart. And what you can see here is a cup and handle pattern forming. Now, if you're not familiar with technical analysis, a cup and handle is one of the most common and powerful chart patterns out there. And the way it is, it's like, the way you describe it is this right here would be the big cup, or kind of like a big bowl formation right here. And then you get a handle. And this handle typically retraces about 1/3 of the previous move up. And if you look over here, we pulled back, or we retraced roughly 38% of the previous move. So what I would look for here is for this to curl back up, and then once we take out $2,089, you could project a measured move up towards $2,500 or $2,600, maybe a little bit higher.
So very interesting to see this when you're able to see it on a chart like that. One of the things that has been announced recently as well is the rhetoric of the tax increases and stuff. Be interesting to see how very wealthy people respond, because if your currency is being devalued and they're gonna steal all your capital gains, it may start to make sense for some bigger money to just park it outside of the system.
Mm-hmm. Yep, 100%.
So show me what you were about the silver chart there.
Okay, so here's a 40-year chart for silver. Again, going back to 1980, and this is a very powerful chart. We just talked about that cup and handle on gold. Well, this is an even larger cup and handle pattern forming on silver. So you got the big old cup right here, and then the handle, we pulled back about 1/3 of the previous big move. And then what this tells us is once we get above $50, that's really the beginning, not the end of this bull market. I mean, that's when the fireworks are really going to get started. Once we close on like a monthly or quarterly basis above 50, that's when I think we start seeing some really surprising moves in silver, surprising to a lot of people who are new. Moves that may sound crazy now, but once we start getting above $50, then we can start talking about $100 plus silver.
Yeah, it's hard for someone to grasp that unless, first of all, you see that initial commodities chart. I mean, it's insane how underinvested these things are. They say buy low, sell high. I mean, good luck finding anything that is historically more undervalued than commodities and silver and gold. There isn't any. The only thing more undervalued would be the junior mining stocks producing it.
Exactly.
That's about it.
Yeah, the leverage is.
So it's amazing to see.
It is, yeah, because this chart again is a basket of a bunch of commodities. It's the Jeffrey Reuters index of commodities, and silver is the most undervalued of any of the commodities in this basket, which makes this pattern in this chart even more powerful.
Yeah, that's amazing stuff. And you've got First Majestic up here, one of our channel sponsors, and you were going to break that down. But let me just say, when you're talking about those numbers in excess of 50, it's hard to wrap your head around. And like I was saying, it becomes a little easier when you see those types of underinvestments. But when you just take into account what we're doing right now is literally a giant monetary experiment. Basically, we've never had debt bigger. We've never had further devaluation of currency. And it's easy for me to see how silver, once it hits that 50, people don't take it seriously. They won't take it seriously until it even happens. And then once it hits 50, they'll take it seriously. And I think as this infrastructures and bills keep being passed that just keep rattling off more trillions, there's going to be a point where very mainstream people on both sides of the political spectrum, as long as they're not full-fledged socialists, will say, I don't think I have the same perception of money that I used to. How are they doing this many dollars? And there's going to be a point where even to people, whether they watch mainstream Fox or they watch mainstream CNN, either political spectrum, I just feel like there's going to be a point where they're going to say, it might make sense to have some silver in my house that is outside of the financial system. Would you agree?
Absolutely. And I think that trend is just starting to happen. I'm hearing from family members and friends from the past who never wanted to hear about silver before. They didn't want to hear anything about what I had to say. Now they're calling me up saying, hey, what's the deal with this silver thing again? So I think that tells me that we're in the early innings of people waking up.
So show me this chart here.
Yeah, so this is First Majestic, and this is a weekly chart, so it's a little bit of a zoomed out view. And what we see here, you can see a very clear triangle pattern here. I like to keep technical analysis very simple. A lot of people try and make it very complicated and to show how smart they are. Well, what I found is that simplicity outperforms complexity. Just simple technical analysis is more powerful. And this is obvious to anyone who can see it. We have a triangle pattern here, and they call this price compression. It's like a battle between the bulls and bears. And then once you get a break in one direction or the other, it's typically very sharp. And these kind of patterns tend to break in the direction of the prevailing trend. So we can see here, the overall trend in First Majestic is up. So I'm looking for an upside breakout from this triangle pattern. And then if and when that happens, the immediate price target becomes the previous high of $24, which with much higher targets thereafter. So we're currently down around 15 bucks. So 15 to 24, that's a pretty nice move in a short period of time if we get this breakout, which I anticipate.
So your last point there says their short interest is now down to 7%. Wasn't it in the low 20s just a couple months ago?
It was, yeah, and I increased. That 7% isn't particularly relevant right now, but I include that because people were tracking it up when it was around 20%, and that was very bullish. That's probably what helped fuel this run up to $24. So that's been unwound, but 7% is still pretty high. 7% of the float people have shorted. So if the stock begins to rise, the 7% who hold that stock short, they're going to have to cover, which means they're going to have to go into the market and buy back their shares at a higher price.
Interesting. What else you got?
Yeah, and I thought we could just take a minute or two and touch on some uranium miners. And, we like to keep these Friday market updates fairly brief. But, I just thought we could take a look at some uranium miners and the uranium.
And if you're still with us here, first of all, viewer, if you haven't, obviously Steve's a wealth of knowledge. He comes on all the time. And, I'm trying to make this channel just like the best education channel out there for people that are interested in this sector of finance. And so we appreciate Steve coming on and doing all that. And if you want to take your studies further, your investments further, his free newsletter, it really is. I mean, I say it, sometimes people say, Jake, stop talking about it so much. It is a really good thing. And it's free. And I think this commodities market is an incredible opportunity for everybody. And so I want to encourage you. And I also want to return the favor for Steve coming on and giving so relentlessly to our channel here. So if you haven't yet, it's in the description and pinned to the comments right there down below, the link to the free newsletter. And make sure you comment down below, I love Steve. Comment down below, I love Steve. And 3 reasons why you love him. No, I'm just joking. All right. So
thanks, brother. Really appreciate that. Yeah. So just taking a brief look at the commodity sector or the uranium sector here, this just provides a really nice perspective from a big picture, which is what we're doing today. And this shows the spot price of uranium going back to 2006. And we can see it was up around $140. Granted, that was a very short spike, but we were up near $100 for a fairly sustained period here. And we're currently around $29, actually just a touch below 29. That is ridiculous. Speaking about undervalued commodities, you got silver and uranium. I think those are probably the 2 most undervalued commodities on the planet. And this spot price is going to have to rise. I know I say this over and over again, but it really is this simple. These uranium miners are going to need at least 50 plus uranium in order to bring their production online. And there's growing demand. Nuclear is a growth industry, and that price is going to have to rise. It's just a matter of when, not if, from my perspective. So this just shows us where we are. We're still early. A lot of people may have seen these big run up in the uranium miners and say, oh, I'm too late. I don't think so. I think we're pretty early in the cycle here. And I like to look at this URNM ETF. It's just a basket of uranium miners. I think you can outperform with a well-selected basket of individual stocks, but this shows us where we are in the sector. And URNM, we've had a really nice run up here. We've pulled back about 15%. So from my perspective, we're kind of pulling back towards some more attractive levels for accumulation. Could we pull back a little bit further? Sure. But from a bigger picture perspective, I think we've got much higher to go. And then I thought I'd show you a really long-term chart here of Cameco. This goes back to 2007. So about 14 years. And this is really powerful here. What happened just in the last couple months. You can see this downtrend line here. We came back and tapped. This downtrend started in 2007. And every time we tapped this line for the last 14 years, we failed. Well, something happened last month. 2 months ago, we tried to get above it. You can see right here. And we failed, came back down. Well, last month, in March, we popped above it on very big volume. That shows institutional money, smart money. Yeah, that whenever you see a breakout on a chart, come down, bring your eyes down and see volume. See the volume. Above average volume shows conviction. It shows big money beginning to accumulate. They're not selling, they're just beginning to accumulate positions. These institutions don't just buy something and then sell it a few weeks later. They accumulate over time. So it would be healthy to see a little bit of a pause here, a little bit of a sideways, but this is very significant that the blue chip in the sector, Cameco, has broken out of its 14-year downtrend line. So that has really bullish implications for the whole sector at large. It shows big money piling in.
Yeah, that is huge volume. So that's a sign that big money's getting in. Like I told you, Rick Rule just told me yesterday, day before, he's buying right now because he says I'm getting into these uranium miners before they take off without me.
Yeah, that's something you have to ask yourself. I mean, right here, right now, there is some downside risk. I mean, on the monthly and weekly charts, we're a little bit overbought, so we could pull back. But if you have no exposure, you also run the risk of these things just running away without you. And these opportunities don't present themselves, too often. This is like a, once every few decades kind of thing. So you have to come up with a personalized strategy. And that's what we help people with that at Silver Charts. And then this is the last chart, Jake. And energy fuels, I figured I'd show this one because this is a popular stock. Everyone likes this one. A lot of people do anyway. I certainly do. And we're back testing this key support level, $4.82. In fact, right here on this day, I think we almost low ticked it. I sent out a real-time alert to our premium members saying I was adding shares right here as we back tested support. So energy fuels is looking fairly constructive here if we can get above this little red resistance line here. And this is a zoomed in chart. This isn't so big picture, but that's all the charts I have for today, Jake.
Yeah, so as you can see in all these charts make a lot more sense. You're way more technical than me. The way I buy energy fuels is just depending on how much caffeine I have. So the other thing about uranium, I don't know if you saw, but they had that big climate summit and Biden said that they want to reduce the carbon emissions in the US by 50% this decade, which is, nobody asks them how they're going to do it. They just say that is the most ridiculous statement in the history of the world, especially because he didn't follow it with saying, therefore, we're centralizing all our focus on uranium, which is the only carbon-free energy source that even has the ability to do it. And what I feel like when I look at all of this, it's obvious that's what's going to happen. It's the only way to achieve any of these goals, if you are following this renewable pledge by Biden and many of these other G6 countries, China, it is physically impossible to accomplish these goals without uranium. It's literally impossible. And what is so interesting about that to me is the public still has no idea. They have no idea. And so to me, it's really compelling because you've got this guy going, we're going to get rid of like all the, so how are you going to do that? You're not going to power America on wind. It's wind and solar. They're going to be components, but unless you have a reliable baseload power supply, it's impossible. And the only one that is carbon, unless they're going to resurrect Nikola Tesla, they're going to let us know about his free energy systems that he was doing. It's impossible. Like, unless that's their plan, is like they're going to roll out Nikola Tesla here soon and let us know. The only answer is nuclear. And what is so attractive as an investment is the public doesn't know yet. And probably many of the political figureheads don't know yet too, because they just give them the papers and they go out and talk. But the real people that are understanding the future of the world, China's demonstrated that. And then you've had that one guy that works for Microsoft that wants to inject everybody talking about it. And it all comes back to nuclear and carbon free. And the only answer is uranium. And this market is so undervalued. And if you look at the history of these stocks, they could easily have a year, this year, next year, or the next year, where every stock you own, like maybe not Cameco, but every junior 10Xs in 1 year. And we're getting really close to that. That's just my rant on it. What do you think? Insane or on?
No, you nailed it. You're 100% spot on. And I wouldn't say nuclear is going to solve it and make all these things achievable, but they can't even make any meaningful progress towards their goals without nuclear. So for the first time since the 70s, the Democrats have embraced nuclear. This is a sea change. So you've gotten very, very little, if any, political opposition to nuclear. And some people may say, hey, well, what about thorium reactors and some of these other things that could come online? Well, maybe down the road, but that's not going to stop uranium from going to at least $50 plus. And I think 60 or 70 is almost a no-brainer. But let's just say 50. There is so much money to be made in this sector between where we are now and just $50 uranium. And as I showed you in that chart before, we were up near $137 uranium back in 2007. So there's a lot of money to be made between here and just $50 uranium. Anything above 50 is just icing on the cake.
Yeah, I bet Rick that the equities will outperform 2007. He says the pounds won't, but the equities could. And so for everyone that is looking at all of this and you're saying like, how do I make as much money as possible? While sometimes we talk about things that somebody might say are doom and gloom, we wanted to present this to you today so you could really see the pure investment opportunity. Like really look back at this chart Steve's going to and see where you are right now. I mean, there's nothing in the world that I think presents a better, not a 1 year, but a 10-year invest. Rick says he makes all of his money in 5 to 6 year windows. So if you just call it a 5 or 6 year window, I don't think there's anything that presents a better opportunity. And so I asked Steve, instead of focusing on micro topics over the last week, that we could present a compelling macro analysis. If you've enjoyed this video, please make sure that you hit the like button right now. Give us a comment down below and let us know you enjoyed this style. Give us a comment down below that says, I love Steve, Steve rules, right there down below. Make sure you get Steve's free newsletter, which is pinned to the comments and in the description right there down below. Steve, give us some wrap up inspiration.
Well, one other thing final thought is that this is going to be a wild ride, this commodities bull market. They always are. And I think later this year, maybe into next year, there's going to be an opportunity for those who want to take some off the table, because there's probably going to be a big drawdown. I think $50 silver and $50 uranium have a magnet over the intermediate term, but I do expect some really sharp pullbacks after that, prior to the really big run after. But what we do for our premium members is issue strategies and some simple ways that you can really amplify your gains and take advantage of that volatility. So I love sharing that with people. I love to teach those kind of things. So again, that's in the free report and premium version.
Yeah, commodities are cool because it's one of the few things where you can actually beat, as Dave Portnoy calls them, the suits. It's one of the few things where you get to beat the elites in the financial elites that, run every market. It's one of the few places where you could beat them. Would you agree?
I would, yeah. And one of the reasons is because these are very small markets. So when institutions come in, they can't just go in big into these small sectors because they would move the price too much. So us retail investors, we can be more nimble than them. So that's an advantage that we have. And that's something I like to exploit, especially in these smaller sectors like uranium and silver.
Absolutely powerful stuff. So for everyone listening, if you've enjoyed today's episode, make sure you hit that like button, hit that subscribe, hit that bell notification to get notified for new videos. Right there down below is a link to the free newsletter to Silver Chartist. And we want to thank Steve for coming on and sharing this macro environment. Obviously, he's on a mission to try to show as many people these financial opportunities that there are. So if you've enjoyed this, give us a comment down below. And Steve, is there anything we've missed?
No, that's it. Thanks, brother. Appreciate you having me on.
Awesome.